just a bit after 12 noon, well, a quarter after 12 noon. And we are back with another edition of Chart the Markets. I am Mark from Blunhouse Technical Analysis. And I'm here with my good friends from FEG Token and SmartDefi.com. If you are interested in learning how to create your own token or how to tokenize real world assets, I suggest you head over to SmartDefi.com and check that out. And of course, our very good friends at BYDFi Exchange. And if you are looking to sign up to a no KYC exchange, you can find a link in course my X profile or on YouTube at Blunhouse TA, and all of that information will be there. It is a great exchange. It's super slick, and I think it has one of the nicest interfaces going. It's actually an absolute treat to trade on it. So give it a look, and let me know what you think. And if you need help setting your charts up and things like that, I'm more than happy to help you. So let's get into it while we can, because what we have here is our 4-hour Bitcoin chart. And this is a chart that we've been looking at for quite a while, like all the way back. May 27th. Here we go. Tuesday, May 27th on the 4-hour chart. And why was that a relevant day? It was a relevant day because it just gave us a quick opportunity to start to chart out some levels, right? Level by level. And hey, I could connect the T line and the top of that wick. That's interesting. I'm just going to drop a line there. It didn't cost me anything. And guess what? A few days later, after that little failure and retrace, hey, we knock on the door again. So there's obviously some legitimacy to this level. You know, and we're not just drawing, although it may look like we're just drawing crayon lines, we're not really doing that. But if you want to think that, that's okay. Moving along, we take another punch and don't break through. So we've got like 1, 2, 3 or so attempts. And where do we get? Well, we get into here, right? Nice big green candle that does what? Breaks through that level without anyone thinking that it was faking it, right? Nice big green candle, and what happened? We got what we like to see, the divergence between the T line and the 5 EMA. That's what's on our chart. The white is the T line. Sorry, the white is the 5 EMA. The yellow is the T line. The 5 EMA will change colors on our script when it senses money in and money out. Gives us maybe a little bit of a heads up or an early entry or exit. But what do we get? Right, that green candle, a little consolidation along this level, but what doesn't happen is you don't fade. So impulse up and sideways back to the T line or the 5 EMA is interpreted as bullish, and I put the ish parts in quotes, simply because it doesn't fade and it holds the 5 EMA and the T line. And the divergence between those two levels stays. Right. Nice green candle. And then some people are going to see these 3 sideways, 4 sideways candles, and they're going to, you know what, that's enough for me. That's enough. I'm out. I'm done. But we're not looking at it like that. We're trying to make sure we're on the right side of the trade from a trend perspective. And we were. This is when your buddy says, I don't know what, every time I sell, boom, the price pops. I can't figure it out for the life of me. And every time I buy, price dumps. It's simple. Chances are it's something like what you see here on the right side of your chart. And it can be on any time frame because it's all fractal. Fibs, fractals, and filters. So impulse up, bullish. Sideways without melting and holding the 5 and the T line and holding divergence, also bullish. And then boom, price takes off. Where does it find a little bit of resistance? We know this thin red line is the point of control on our volume profile. That's what it is. And that is kind of the average of all of this past price and volume at one level. And it creates this point, right? That's where the red line is formed. That's the point of control. On the either side of that point is a gap on the volume profile, and that's what we have here. And we always, always, always talk about what happens if you fall into the gap, either to the upside or the downside. You risk price falling quickly, and that's what happened. You fail the point of control, falling into this gap. We know what happens. And it happens to the upside and to the downside. Is there anything else we can look at? Sure. What and where did we fail? And let's just try and keep it simple. We'll just use the 20, the 50, and the 200. The 20 is green, the 50 is blue, and the 200 is red. And this is what you'd be looking at. Upper value range, lower value range, point of control, and the levels that we've drawn manually ourselves. Okay? That's what's on the chart. And of course, we're running our script. What do we say we don't want to trade? Chop. I don't care if it's on a 5-minute chart or a monthly chart or a daily chart or a 4-hour chart. Avoid the chop. We really want to trade the breakouts and the breakdowns. That's where the money is. So at this level in here, when we had our original breakdown, we failed the 20 and the 50. And you also had a little bit of you had a doji there that you'd have to be looking at in order to catch it. But you can see that's an exit candle. You get a sell signal, boom, price dumps. Basically comes down to the lower value range within a penny or two. Retraces higher. Where does it wick out? Right at the upper value range. This is why we run a simple volume profile. It's showing us where money, volume and price has and hasn't been. And it gives us another range and another level of support and or resistance. But we know that when we lose the volume shelf, which is this, in this case where the point of control is, we're literally falling off a shelf and we're not going to land until we find something to sit on. Simple as that. So by adding the 20 and the 50 MA here, it's right in line with that volume, with the point of control on the volume shelf. So you're failing all of those levels. And when we fail one level, and we're talking about moving averages here, what do? We find the next. I'm going to remove these lines just for our eyeball's sake. We talk about it all the time. Break one level, in this case 2, find the next. Took another run at the 200. This is your first break. Here's your first attempt and failed right away. That's a gravestone doji, essentially. And a gravestone doji is a long wick and a small, thin base. That tiny, tiny wick might negate it technically, but it's pretty darn close. And gravestone dojis are pretty self-explanatory. Big red candle follows it up. Price moves down. And the idea is not to front run the chart. Like, I'm just going to go to a 1 hour because it might show it a little differently. So right up here, you can see this is chop. When you have your 3 major moving averages like the 20, the 50, and the 200 all rolling together like that, that's chop. Here's your short signal. So when you see these signals, they're not entries and exits. Think about them entries, long and short. Okay, so don't necessarily think of this as an exit all the time. They are entry level short and entry levels long. Okay, so you have that consolidation, you're trading above the upper value range, so you might be into a little bit of a premium kind of situation, and you start to roll and fail all three of these things at the same time. Now, some people will say, oh, you don't have to pick, you can pick the top, you could have got it here, we know it, or somewhere always slightly better. Our job is to get you in at the right place at the right time safely. So, even if you got caught up in this little snapback situation, and you didn't get washed out, obviously, you're still good. But if you waited till it breached the 50, which a lot of traders would, think of this as a sandwich. This is the bread at the top. This bottom part, you're going to give away some of that. That's the bread at the bottom. Everything in between is your money. The little bits that we pay at the bottom to get a safe entry here is just insurance that we pay. That's all. And everything else is yours in between the two safety zones. Think of it like that. 4 hour gives you a real good look at what failing the 20 and the 50 look like. And if you want to back it up to see where it really happened, you would just dial your chart down, back up your time frame, and you'll find it. In this case, it really didn't get you an earlier entry or anything like that. But current price is revisiting past. That's what that's what we're doing right now. And if this fails again, what happens? You take out the previous wave's low. So for those of you that love chart patterns, someone's going to email me and say, did you know there's a death cross setting up on the 4 hour? You were looking right at it and you didn't say anything. Well, here we are. So I'll say it out loud so that everyone knows we're looking at it. Is all it is at this point is just a short term or a shorter term moving average crossing through a longer term moving average. But I do believe the 4 hour Bitcoin chart gives away a lot of secrets. So I think it's worth watching, because how do we protect ourselves when we're in a trade? We have to look forward. So let's pretend we're in a tunnel and there's railway tracks in the tunnel. We're in the middle of the tunnel. And we can see the light at the end of the tunnel, and the light at the end of the tunnel is our target. That predetermined marker that we set at the beginning of our trade that we would either take profit or exit the trade at. Think of that light, think of that light as your target. What do you do to make sure that you don't get hit by something you didn't see coming? You look backwards. We shorten our time frames up. If you're on the 4 hour, you might look at the 1 hour, the 30 minute, maybe the 15. Why are you doing that? You're doing that to see if there's a change in trend coming. And if you're not looking over your shoulder to see if that trend is coming hard and changing, a couple things are going to happen. You're going to get really lucky and you're going to make it out of that tunnel before the train comes and runs you over. That's why you look forward and that's why you look back. I want you to focus on the time frame you're trading, but you want to look for confluence moving ahead, and you want to make sure that the trend is not changing behind you and you get caught up in it unexpectedly. Those are really, really, really important things. We have other cues that we're using here too as we expand our chart for you. We have a stochastic RSI, a Fisher transform, and then a MACD. The stochastic RSI, I get this all the time, people try and trade every little cross, and that's not what we want to do. What we're looking for And our methodology is to trade the, in this case, overbought, resistance at the 200, overbought and also rolling over, that's the Fisher. And the MACD, moving average and signal line, is below zero. So more bearish things tend to happen when that's the case. And it also looks like it's arcing as it gets close to the zero level. All of that is, again, bearish. There's still divergence between percent K and Y, I believe it is, or D, and then your Fisher transform still diverged, telling you that the trend down is still intact. And if I'm looking for a setup short, what am I looking for? I'm looking for an overbought stochastic RSI. That looks like it's ready to roll over. I'm looking for a Fisher transform that's going to give me a similar type of execution, and then the MACD follows last. And they're in this order because typically this is how they run: 1, 2, and 3. Not always, but most of the time. Right, so the chop you don't want, you knew you were in a choppy, you knew you were in chop, and I know so many people tried to front run this to the upside. And are gonna take out the highs. It's not really what happened, not yet anyways. It's gonna have to take a little bit of a breath and then take another run at it. So where does it pull back to? Let's look at the daily. What can we learn? Why do we like the 50-day moving average? Break one level, find the next. If we don't hold the 50 and we break the 50, any ideas on where we might go? To the next level down. And the next level down is probably going to be the 100 MA. What, level by level by level. Okay, remember, this is the daily. So on the daily, what do you see beneath you? You see that big volume gap. We know what happens to price when we're in there, and we can see that we're trading in a very light area. That's represented by the gray on the right side of the chart in the volume profile. The blue area is where all the density is. There's a reason why this is called upper value area, right? Everything above it is a little bit of a premium based on roughly, I think it's 200 candle look back on the volume profile. Bottom line is that if you were to fail, you'd be attracted to the next level, and so on and so on. 100 MA, upper value area. If you don't hold that, the 200, by that point you're into the gap, and then you have a problem. And the point of control is like a magnet, right? It's like a magnet, and it becomes a draw for price. Just keep in mind that the volume profile is a dynamic thing, right? It's always moving based on the time frame that you're on. You might even pick it up on a super short time frame. You'll see these little bands move just a touch. So it does move. So it's a matter of time and price coming together to meet them. But make no mistake, when you fail one level, you will find the next. Is the T-line and the 5 EMA still showing us divergence to the downside? Yes. Is this starting to look like the failed breakout we talk about all the time? Yes. You notice the wick punching through the T-line and then pulling back and then closing below it. And then you end up with a big red dagger. What do you think's going on here? Probably coming back to take out the previous wave's low. What you were hoping for if you bought these two candles is that you were going to take out the previous wave's high. So pull back to the 50. I always considered the T-line to be kind of that ultimate breakout level. It fails, but the divergence is still there, so I know that the short's still a good play. Where's it going to go from there? Well, we just talked about it. You break the 50, you find the 100. This is a bit of a volume gap, so there's not going to be a lot to hold you up. And the rest we've seen before. Rinse, rinse, repeat, repeat, and so on and so on. So we're looking forward now onto the weekly chart. And are we overextended? Probably. Look how far away we are from the 20 MA, just like we were over here. So time and price have to come together to meet. And when they do, a decision gets made. Is it reasonable to think that price may want to pull back and find the 20 somewhere in an area that it's been before? Sure. Let's just have some fun and drop a level in here that may make sense. Something like this. The price could come back to the 20 MA on the weekly and bounce. Right? This is looking through the tunnel, right? To look ahead. Green candles off the 50. Continuation off the 20. This time you fail it. Right back to the 50 and bounce. This level that we drew earlier last week looks kind of relevant now. Right? You can see that there's something to this level. It's just level by level. Break one, find the next, both to the upside and the downside. It's just a little harder today to find the upside ones. Let's look at XRP. Where are we? Here we go. All right. Daily XRP. Based on how we kind of look at these charts, what are we expecting to see here? At this point in time, right, this downtrend is still intact. These two green candles could simply be just green candles in the continuation of a downtrend. If this does fail, so basically this, remember, this is the point of control on this daily time frame. And that seems to be where the resistance is coming from. So if this is a failed breakout and price does roll over, you're going to look to take out the previous wave's low. Not all in one candle, that's not what I'm suggesting, it's a process, but that's what it would be looking for, kind of in the neighborhood of the 50 MA. And we must have been in here before because we've drawn this level, and you know it seems to be right at the bottom of a volume gap. We know what happens to price when it gets inside these volume gaps. It can rise or fall quickly. And there's lots of ways to take, even if you're concerned that, oh, these green candles, they still freak me out. Well, if you want to manage that another way, you can use Heiken Ashis. They're not my first choice, but they do a nice job of filtering fibs, fractals, and filters. They do a nice job of filtering noise. So this is the daily. And if you're trading Heiken Ashis, what you would be looking for when you're going long is your first green candle with no lower, or sorry, your first green candle with no lower wick and a parabolic below price. So this candle here would qualify as your entry candle using parabolics the way I do. That would be your entry candle. Our script is giving it to us the candle previously. But this will change and flip-flop all the time, so don't think that one methodology is better than another or anything like that. It's just that in this case it did. And is all you're doing is what we then do when we're looking at regular candles, we just want to make sure that we're trading on the north side of the 5 EMA and the T line, and that the trend that we're trading is still intact and we're on the right side of it. That's it. And if you take off your candles, if I was to hide these candles, it doesn't really matter if I'm using Heiken Ashies or if I'm using regular candles. This was your entry signal. Price rode all the way up here. Oh, your 5 EMA starts to show red and you start rolling over. Even without candles, I would know to take it off. Or if you were looking to go short, you'd probably look at it as a good short entry. But the point is, that's how simple this is. We're not reinventing the wheel. We're just listening to what the market is telling us. It's a real-time representation of what money's doing, not what people are saying. And we just use a handful of indicators that are quite common, that anybody can use, and anyone can learn to interpret what goes on around them, just as we do in here. But at a bare minimum, even if you just run the script, it's really hard to make mistakes. Right? If you bought this candle and way up here at the top of this bull run, that showed up, that little skinny ass doji where everything comes to a point like that, the reason it comes to a point is because it's a drastic change in flow, right? It's outflow, massive, and it quick enough and heavy enough that it pulls down those shorter term averages like that. So that's the get out of Dodge candle. Simple. It's really that simple. It's doing what we're told. Avoid the chop, trade the breakouts and the breakdowns. Don't be afraid to be stopped out. It's not a bad thing. It's a badge of honor, right? It demonstrates that you can mitigate risk, which is really, really important. Right? And it doesn't really matter what chart we're looking at. Now we're going to look at oil, and it's going to hate the volume profile, so let me take it off. Okay. Talked about this before. The very simplest of terms, and now this is something that I've been charting for ages and ages and ages, since here. But is our chart lying to us? That's the daily. Let's go to the weekly and take some of this out. No. We've looked at this chart every week because it's important for us to see the evolution of a breakout and a breakdown. Now, even if we're just taking buy and sell signals, right? Long and short, that's great. But when we really get into it, we can tell with some reliability what price might want, right? And current price always wants past price. Is this the failed breakout that's going to roll over and take out the previous wave's low? Probably. We just have to argue whether it's this one or this one. Does it seem unreasonable? Yeah, probably. But it's just what the chart says. If we start looking at long-term numbers, long-term averages, it's 40 years, 20 years on this time frame. So 1,000 days on the weekly chart is roughly 20 years, or 40 rather. The 1,000 day on a monthly chart's like 80 some odd years, 84. So what does that tell you? It tells you that when you're failing these long-term averages, it's a bad thing. Just like when you get support from them, it's a good thing. But when you lose it, a long-term average like that, there's a message there somewhere. And it's typically that there's something not right. I don't know what it is, but there's just no technical case for me to say that this thing wants to go higher. Not yet, anyways, not today. Eventually, but just not today. And people get upset when we talk about where price might want to go. Right? Past price, right? This was looking for past price levels. Just current price looking for past. Nothing to see here. Just going for a stroll. Sometimes the stroll's north. Sometimes it's south. And sometimes it's just straight east and sideways. But it's just going for a stroll. Don't front run the chart, just follow it. And know that current price looks for past. When did we draw this trend line? Well, we draw it the first opportunity we had on the weekly. And it's not that we want to live and die on it, but wow, it's been very well respected. And we just layer levels, right? Time and time, over and over. This is the 200. Look at how price respected it. That's why we flip these things, so that we can see. Was this just a gravestone doji, or what else was going on here? Hey, I don't know, you failed the 200 MA on the weekly, and it gave birth to a gravestone doji. There you go. Price falls. All the way down to, $55. Catches a little bit of a bid, everybody gets excited, retrace. If you're trading this, and we're trading on our levels, when are you going to take this thing seriously? You're going to take it seriously when it's trading above all its current resistance. Until then, it's pushing water uphill. Right? Where is the 200? And the 50. Well, gravestone doji at the 200 tells us something. The failure at the 50 tells us something. This is obviously being treated like an allergy at the 50. Now, where does price fall back to? The 20. And if you break the 20, where do you think you're going? The next major, which is right here. The 500 MA weekly at 63.87. It has nothing to do with what you want or what you need price to do. It's just going to do whatever the hell it wants. And you're either on the right side of it or not. And if we look further down that tunnel into a monthly here, again, you can still see the trend is intact. But what else is going on? Continued failures of the 200 MA monthly. And does this not look like one of those failed breakouts to you, where you come back and take out the previous wave's low? Kind of does, doesn't it? But most people aren't looking at this time frame. They're looking at the daily if we're lucky. This is all relevant. Does this take a lot of time to play out? Sure. Are there a lot of things that can happen in these monthly candles that change their direction? Absolutely. However, what we do is fractal. What we see on one time frame appears on another. We've shown the failed breakout a million times on a million different time frames. Here it is on the monthly. Just as relevant. Just takes longer. That was the target of 61.66. Is it unreasonable to think that it would want to come back to a place where it's been on and off for 3 months? No. That's a quarter. And if it doesn't get any love as it takes out this low, it's just going to continue to fall until it does. Find something it can sit on. Maybe a bench of past price. And it doesn't matter. This could be oil, Bitcoin, or IBM. Right? We're failing the 50 on the daily. So we're breaking the ice. Or as David Elliott would say, it's an ice hole failure. You don't want to do that. Before we went on, we wanted someone who was talking about Monero. So let's take a quick look at it, and let's throw the volume profile back on because it's important. All right. So what we this level I drew here because of this bench. And for me it was, we'll see what happens when we get here, because the 200 MA was making its way along. The theory is, hey, let's check price when we get to this level at the 200 or in and around there and evaluate things at that point. Because if this is something that you want to hold, you want to make sure you buy it at a, at a good point on the chart anyways, or as best as possible. So you don't want to buy it up here as it starts to fall. That's not the plan. So this is just here because it looked like a bench and the 200 was underneath it. And I thought, you know what, maybe time and price come together, these things meet, and then whatever decision gets made at this level will be interesting. It could be, you break the 200, so you're not going to want to buy and hold, or it looks like it's bouncing and maybe it's a good time to buy. That's the only reason that it's there. But this is why we do this, so that we know where these levels are, because these levels are opportunity. If you're short, they're opportunity to the downside. If you're long, it's buying at the right place. Perhaps this just becomes another continuation move off the 200. You've had it here once, although it's not the first touch, so we have to be careful with it because we don't want to be buying here when it breaks. That's the other caution to this one. Could be a continuation. You just don't want to, you just don't want to be the one bag holding when it breaks the 200. Right? And of course, if we look forward to the monthly, to the weekly chart, does that kind of change your perspective of where you might want to buy? It does me. Because here I'm breaking the 200 right in here. Just got a sell signal this week. You can see the divergence is just starting to open up. I don't think hitting this is going to be a problem. So if we break one level, we're going to find the next. So there's some significant downside risk here. And this is why, if you're a long-term investor, we get this all the time. You know, I bought and then it tanked. Well, when you look at the chart, you're going to say to yourself, oh, I bought here. Oh my God, I can't believe I did that. Right? That's why we're doing this. The money's not going to burn a hole in your pocket just because you're protecting it from downside risk. Don't think that because you didn't put the money in the market that, you're doing yourself, an injustice. Sometimes the best trades are the ones you don't make. Right? Buying long here would be that exact scenario. This is not a bullish setup. This doesn't hold, and I know it's early in the week, so by Friday we could have taken out the previous wave's high, who knows, right? But at this point, if this breaks down, you're going to have to look to this level in and around the 50, which is, the top of these candles, maybe, just as a rough measure. Just break one level and find the next. And if you don't hold the 50, here you have the 200 sitting at where? The upper value range, which means that all of this is at a premium, in a sense. And we know how price is drawn to the point of control. And we haven't even hit the upper value range yet. So there's some downside here. Let's look at ETH. Wow. Okay. Now, are you trading above the 20, the 50, and the 200? Let me see if I can find a different chart for this because not that much more history. All right. Not too much different. So on this weekly time frame, this is ETH. Are we trading above the 20, the 50, 20, 50, and 200? Absolutely. So we know at some point price is going to want to come back and check those levels once it's been overextended. Sometimes it's just a check and a continuation, and then other times it's a check and a breakdown. So you had a big move down that caught, look at that, 4 bases right along the point of control. You can start to see the money come in because your 5 EMA goes from red to white. And, you know, you could have gotten in here at any time and felt good about it. And price just went straight up or sideways and then straight up. This is another example. Impulse up and then sideways, but the divergence doesn't break. And the only way this is a problem is if you're over leveraged. Right? But the divergence didn't break and the trend is intact and boom, price goes higher. But just like here, here, and here, it will come back and test these levels. I don't like the fact that it's gotten really far away from the 20, and all of them are in the same neighborhood because that's a draw for price, and price is going to want to come back to, at a minimum, 27 and change. Not all in one day, but I think you understand now how price moves. And there's some significant hesitation to take price above this 3,900 level. And what do you think's going to happen when all the people that didn't sell up here that were in through here? What do you think's going to happen to these people when price gets back up there again? Do you think maybe they're going to sell some lots? Probably. If they're still around, be a great opportunity to take money off in and around an all-time high. And that's what traders do. This is a little bit of a concern on the weekly chart, though. I don't like the risk to the downside if you're long is considerable. So be very careful. Is it still a bullish chart? Yes, it's trading above the 5 EMA and there's lots of divergence. You just don't want this to be a big giant top, that's all. Let's look at UNH today because it has a little bit of a heartbeat, but only a little bit. This is the weekly chart. Sorry, 15-minute chart. And we look at these charts no different than we look at a crypto chart or any other chart. At no time was there any reason to be a buyer here. And this is a 15-minute, right? Green candle at the bottom, but because this thing has been so beaten, I absolutely wait for the confirmation. You get the divergence. If you look at the bottom of your screen on the right, you can start to see everything unfold. What do you think our targets should be here? So we're probably in this candle. That would be a target on any time frame you were looking at, which is the 50. But you don't fail, but you don't make it. What a grind. Here you go. This is what we were looking for. Now you're off to the races. Right? So your next target is up here. And I don't even have 100 on it. Sometimes you'll tag the 100 or look for this level. Right? This level here, quickly. There you go. Broke through this resistance right here. Now you're looking for this level and then the 200. So this is a bench that you're going to want to have to break through and then find the 200. Simple. But what does that look like on the hourly chart, or maybe more importantly on the 4-hour chart? It's still a long way to Tipperary, and you have not even tested on the 4-hour the 20 yet. You did here, so you broke it. I guess that qualifies as your first attempt, actually. So there's your first failure. There's your second failure at the 20 MA. This is all a process, right? 1 attempt, 2 attempts. This is going to be a 3rd attempt. And if it breaks, you're going to go through the same scenario with the next level. I'm not saying you're going to get the exact number of tests or anything like that. It's just the process of breaking through. The anatomy of that breakout is the same. Right? Why do you want to break through the 20 here? Because you want to get into the gap. Right? You want to get into that volume gap to the upside, because now when you start getting the wind, the wind at your back, you break through the 20 after a couple attempts. You're going to run at the 50, which is in the middle of a gap. That's more encouraging. You're going to want to look to the point of control. And as you look down the tunnel on the longer time frames, it looks more and more and more like a heavy lift. Doesn't it? Like we look on the daily and we're like, oh man, those other charts looked awesome. Right? Like that 4-hour looks nice and bullish. 30-minute, breaking one level, finding the next. Like this is exactly what you want to see. And then you get to the daily and you go, oh, man, I'm tired from just looking at that. Because what do I have to do? I still haven't broken through the 5 EMA yet. I haven't even tested the T-line. Oh my God. Right? That's how I feel just looking at this chart. Now, maybe tomorrow's candle is another green candle. Maybe the wick of that candle breaks through the T-line but closes below it. Have we seen that yet today? Sure we have. But what we're looking for is confluence to the upside. And you're seeing it, right? It's clear. There's your 30-minute. Oh, geez, what's my 1 hour look like? Yeah, it looks good too. It's starting to get some action off the 20. Oh, the 4 hour. Oh, it's got a little more than a heartbeat going now. And hey, it's broken through the T-line. That's a good thing. You want to make sure this candle closes above the T-line. That's not an absolute reversal signal, but it's the start of one. So that would be something I would look for to tell me if perhaps this downtrend is going to be over. A close above the T-line would be one. The 5 EMA pulling up through the T-line would be another, and then, so on and so on. So finally, United Health has a little bit of a heartbeat, although it's got some heavy lifting to do. But the upside opportunity is clear, and that's our job. Identify the upside opportunity, the downside risk. And if the downside risk, everybody knows what that is, because I think this is the boss chart right here, the weekly. I'm just going to take that off. This bench, this is again a weekly chart. So 1, 2, 3, 4, 5, 6, about 8 weeks, 9 weeks at that level, which happens to line up with areas of past price that I would normally identify. And the fact that 1,000 days of price history on the monthly chart was sitting there was was and was not coincidental, because we live in a fractal world. Everything is fractal. On this weekly chart, are we still trading below the 5 EMA? Yes. This is still a bearish chart. This candle, this weekly candle, what it needs to do is it doesn't just need to test the 5 and test the T line. It really needs to close above this level, I think, to demonstrate to me that this, whatever this is done. And I'm not quite convinced that it is. Or not at all convinced. This is still a bearish chart. Do you think this price level is unreasonable now that you see the 200 MA monthly here? No. At 225, I still think that's the number. It'll be close. It'll be close. This isn't pin the tail on the donkey, right? The donkey doesn't care about you, and neither does the pin. The only thing that matters is, are you interpreting the chart properly, and are you on the right side of the trade? So going back to the weekly chart, if you're in the short on this candle, do I really care about it trying to figure out what's going on this week? No, I don't. I have more than enough time to let it figure itself out, because I got in and I'm in the driver's seat. And when you're in the driver's seat, this job is a lot easier. Right now, we're still looking at short-term averages breaking through longer-term ones, and in any instance, that's not bullish. It's bearish. If this candle doesn't break the 5 EMA, I would consider this just to do another trip down. So just follow the divergence. It'll tell you everything you need to know, and look for confluence like you see on the shorter time frames, and rolling them out. Look down the tunnel. Do you not have targets? Sure you do. Right? Next major moving average, which is the 50, lines up with the bottoms of these candles. That's appropriate. Next level up, I love this here through this gap. Like, that's really what you want. And so on and so on, one level at a time. But you know what? Stuff doesn't go straight up, does it? At some point, you're going to hit some resistance, and you're going to retrace a move and test the levels to the bottom, right? To the downside. And some of them you'll hold, and some of them you won't. This could turn out to be a very good trade on a short time frame, like an hourly or a 4-hour. But ultimately, the trend may not have changed, and this week's green candle simply is a footnote of a greater move down, like this one was. Right? So this is long from over. It's nice to see it has a heartbeat, but it's long from over. Let's look at the dollar index, because it's quite technical right now. Again, levels, right? I don't like the volume profile. That's fine. And let's just take off. Okay. Why is this level here? It's just simply trying to connect as best we could past price. Just like we're doing here. Remember, when we're dropping these levels in, we're usually doing it early, and we don't really know until later on how close they were to being true. But this is a daily chart for DXY, which is the US dollar index, which has been kind of under some pressure. Right? Now, what do we look for when we're trying to find out or determine if something's breaking out to the upside? Higher highs, right? We look for higher highs and higher lows. So the question becomes, and I don't know if there's a real good answer for this because this one's a powder keg right now, but technically we're starting to make higher lows and higher highs, which suggests, the kind of the anatomy of a breakout, right? That's what we look for, as opposed to, lower highs and lower lows, which is indicative of the opposite. So we are showing those kind of signs of a breakout, but it's very interesting to see where these levels get stuck. And they get stuck where they've been before, right? So this is just a situation of price working through past price if it has enough momentum to break through it. So this is a real interesting chart, the DXY chart, and it's not an easy one to figure out, but it looks like this could be one of those failed breakouts. These little dojis aren't helping us, but they're still bearish looking, and what's going to happen here is that if they continue to the downside, they're going to take out the previous wave's low at 97 and change, 97.1. If they kind of catch a bid and this becomes another higher low, it will want to create another higher high, which then takes out this high and has us looking towards the next one. And, to some people, 101.7 seems like insanity, but because of how this thing's behaved, and I totally get that, but that would be a target to the upside. So if we continue to make these higher lows and higher highs, you can see how we would get there, knowing that we're looking to take out the previous wave's high. Does that make sense? I think it does. All right. Now we're going to look at gold. This is a daily chart of gold. Not a lot of quit. Right now, do we want to get lost in the weeds on why gold's gone up? No. We're big enough people that we can kind of put two and two together and figure out that, hey, gold is a risk asset. So the takeaway is that people must think there's a lot of risk out there because they're driving the price of gold up. Pretty reasonable. Where does it go from here? Well, are we in just pure price exploration? Pretty much. All we can do is guess, use some standard deviations and some fibs. But really, this is all price exploration. But if it continues to trend the way it's trending, so we're trading at 33.80. I don't think 45 is an insane number in the not too distant future. If it continues to trade like this, which would indicate that there's a tremendous amount of risk that still exists in the market. So this is a very, very, very bullish chart, even still on the monthly. So I only interpret this sideways stuff, just like we talked about earlier with some other examples, but only on a grander scale. I interpret this as still bullish. This sideways, big impulse up, but this sideways stuff is still bullish, and I think eventually it may want to break out, even from here. So we're, 35-ish. That's a lot of gold. Our friend Rico Moneybags has been trading this CFX. Now, this is why you look at daily charts, because you want to be on the right side of the trend. Right? What do you notice on this chart? Anybody real quick? this here. Excuse me. Kind of starting to print an M on the daily. And I don't like M's. M's are murder. W's are winners. And I don't like the two equal tops on the 5 EMA. That also scares me a little bit. So if we're to break down, we break down and we take out the previous wave's low. That puts us in a bit of a gap to the downside. You have to look to the lower value range at the very least. But I have a feeling once we start to flip some averages on here, we're going to, oh, there we go. Levels. Gotta love the levels. So if we lose the T line, you're short to the 20, which is perfectly aligned with the bottoms of these candles and the tops and bottoms through here. So that's a legitimate target. Are we trading well above it? Yep. Is it time we come back to tag it? Yeah, probably. So I would be inclined to watch that level. And if you break it, to the downside. Just over and over and over again. We haven't had a continuation off the 20, so you could have a nice move up, catch the 20 and bounce, sure. But that's your risk to the downside. The opportunity to the upside is taking out the previous wave's low. When you're changing time frames, one of the things that I look for is where is the 50? So I'm kind of always trying to find the 50 as kind of the ground zero. I like to buy at the 50 and I like to sell at the 50. In this case, you know, you're probably failing more than the 50 here, but those are areas that because I'm always looking for it. So if I'm trading on shorter time frames, then I'm still looking for it on a 5 and 15 minute and an hourly. Because again, we live in a fractal world. Everything is fractal on our charts. Let's take a boo at Solana. It's pretty tough to find green today, isn't it? So did we look at this chart already? I don't know. Anyways, we're probably going to see a little bit of that, right? Again, here's the failed breakout setup. You don't want to break the 20 and the 50-day moving average all at one time, right? That's just kind of doubly bad, and that's what would happen on Solana if this was to fail. So kind of note to self, that would be a sketchy thing. Because I think it brings you way back down into the 140s quite easily. So you want to make sure Solana holds here. So it's the 20 AMA on the 4 hour, and on the daily, it's the 50 and the 200. Looking forward, on the monthly, you can expect price to trade between 170, which is the 50, and 153 here. Those would be ranges that I would anticipate. If this rolls over, does not hold the 20, because there's a range here and it doesn't hold the 20, expect it to take out the previous wave's low. If it was to bounce, you would look for it to take the previous wave's high. I know it sounds incredibly simplistic, but it literally is our reality, right? It is that simple. What does this candle say to you? Let's move this chart to the right, because this is what we would be looking at. That candle to me is a little suspect at the top of this run. We're trading well above the 20 and the 50. And at some point in time, you're going to have to come back and make contact with it. You just don't have that much energy to drive yourself higher every single week. You just can't. It's just not possible. Price will lag and then fall back down to here. It's just a matter of when it finds it. But I didn't like last week's closing candle. I'm a little surprised that it actually opened above the body, but it hasn't taken even the wick. So it's a little on the suspect side on NVIDIA. What else can we look at for you? Where is it? There's going to be a lot of stocks out there that look like this. And everybody wants a deal, especially younger traders. I am going to find the flattest, squished, beaten up stock that I can find and buy some of it, a bunch, a little, whatever it is. I would I would avoid that. I don't want to even call it a strategy. I would avoid that at all costs. Even if, on the off chance that something does pop, if it looks like this one, stay away. It's just not worth your time. Like you're not a technician at that point. You're just rolling the dice because the odds are such that it could fill your pockets. Right? It's not what you want to do as a trader. A lot of these companies will not have a path to profitability, or at least a reasonable one that can be justified. Right? You can buy these stocks, but there's absolutely no guarantee they go anywhere at all. Is there a trade in here occasionally? Yeah, I guess. But quite honestly, don't be hunting for this kind of stuff. Are there stocks that maybe make a little sense? Sure. Here's one that's been beaten up for a long time too. But this has had a heartbeat for a while.
Hey, hi.
Hey.
Yeah, long time. How you doing?
I'm
Sorry
good.
to cut you short. Yeah, brilliant. Awesome. I just because we don't have a lot of people, and I'm not that kind of guy who's very technical, but like to hear your perspective on a project. Yeah, probably you know it. It's called. You can check it on Trading. Is it Trading View?
Mm-hmm.
It's called Norma. It's part of the SD. NOMA.
NOMA, right? NOMA?
I'm just curious. Nothing
That's not
technical.
it, is
Don't
it?
go.
That's not it, is it?
I'm on my.
No, that's not it. I think I know where I might find it. Hang on.
If you go to Smart DeFi, you'll see.
Yeah, that's where I'm going to go. Okay.
So if you ask about utility, it's
So what is
RW.
this? What are we looking at?
So its utilities are tokenization of properties, and they're going to go to tokenization of equity, debt, and stuff like that. So they launched last year, August, on the 8th, and they are working towards getting a license from Capital Markets Authority to tokenize. They probably will be the first in Kenya to get the license from Capital Markets Authority, and then they will expand to other blah blah blah. You know about RWA.
Okay. All right. So
They got websites, they got everything. You want to research, it's up to you, but yeah.
So they
But I
tokenize.
just wanna,
Yeah.
huh?
So they tokenize real world assets. Is that what you're saying, basically?
Yeah. So they want to, first of all, so the main business is rent to own, rent to own. So they will tokenize rent to own, where people can literally rent and then go to own the property.
So what's the website? Is it? Do you have a website?
Nomachain. Okay, so there is nomachain.io.
Nomachain.io.
Yeah, and they're working on a new website at the moment.
Okay. So so
Nomachain.
so people can go to nomachain.io and check that
Mhm.
out to get a better understanding of what the project does
Yeah.
from a technical point of view. And we've shown this a million times. You know,
Mhm.
XRP chart looked like this, right? Where it just was flat and then all of a sudden it opened up. And this is just
Mhm.
another example of what that looks like, right? Is
Mhm.
you get the momentum coming in and you get the continuation, like these are continuations off the 20 MA and just keep going higher. So
Mhm.
this is so far I would say it's a bullish chart, right?
Mhm.
And that,
And the utility, or so we haven't even spoken about the RTO. The RTO, basically, people will be paying in normal tokens. The renters will be paying in normal tokens. So imagine at the moment we've got about 1,700.
so
I don't know.
so what happens? So
People
if I
signed
rent
up.
so if I rent furniture, I pay them in tokens, is that what you're saying?
Now, if you rent a house,
Or rent a house, okay?
if you rent an apartment, a house, yeah, we've got an app as well. There's an app for it. If you rent a house, you pay rent in normal. So if one house is say, I don't know, $200 a
Okay.
month, and you got 1,000 people,
Yep. Okay.
and they are working with the government, do the math.
Yeah. Okay. Gotcha. All right. So people can go there to find out how that how that works. But
Yeah,
as you know, as far as the chart goes, it's a bullish chart. I don't know what
yeah.
else to say.
So far,
Yeah, it's been a very bullish chart.
yeah.
Like,
Just wanted to introduce you to it, you
yeah.
know.
So yeah, people can go to Nomachain, like nomachain.com, I think you said,
No,
and check it
nomachain.io,
.io,
and
I'm sorry.
there's a new website coming up. Is normaltoken.com. They're working on it,
Okay.
and we will have a launchpad, a marketplace for for the tokenized properties.
Cool. Well, I'll tell you
Everything,
what,
all
when
the information is on the website. Everything.
good. Well,
We've got a pitch.
when we get closer to that, we can spend maybe a little more time with talking about that
Yes, sir.
with those guys. Yeah, but I think it is a good example of how you can actually pretty much tokenize anything. So
Mm.
it's I'm not an expert in it, but I certainly find it pretty amazing on what you can do today that we couldn't do even a few years ago. So it's pretty. The technology is awesome. That's for sure.
Mm. They launched on from Smart DeFi, which is awesome.
Yeah. No, that's great. That's what you want to do. I want to look at this layer chart because it's a chart that just died and hasn't come back, and it would be another example of where people are like, "Oh, yeah, it got killed, and look where the high was, and all that kind of stuff." But again, at no point in time has there been anything serious happening here that would let you believe that the chart wants to move higher. And when you see it on the weekly like this, you can actually see how bad it is. You lose sight of it a little bit on the shorter daily, but on the weekly, that you can see. Here's another example of an attempt to break through the T line and fails, and then the trend down just continues. And it's already taken out the low, so who knows where this could go. Just because it was once somewhere doesn't mean it's going there again. I think that's that's the takeaway. All right. It seems to be that crypto wants to sell off a little bit today, but stocks want to go higher. Let's look at Cleveland Cliffs, which is a steel manufacturer. Here's another example of ranges, right, and targets. So if we throw on a 20, a 200, and a 50, nice move right off the lower value range. Like, I love buying down here, when you can get in and around the lower value range, because it usually means there's some upside. Resistance at the 200. You actually gap up a few days later to take it, but look, you can see what happens. You knew the 20 was here, you knew the 200's here, you knew the 50's here, and this is a big gap. All of this is a big gap. That's how price got up here so quickly in the first place. And this is what happens when it retraces. It feels worse than it actually is, right? So when we throw fibs on here, what are we looking for? There's the swing low, there's the swing high. Let's say 618. 618 is at this level. 870 something. 872. And here's the 50. If we don't hold the 200 MA, so we break one level, we find the next. If we break this level, we'll find the next. Right along 618. Point of control is even below that, so that's also a draw to the downside. And again, it is just the anatomy of price breaking down. That's all it is. And there's the same thing when price breaks out, right? You look for levels to the upside. And we're just constantly looking forward and looking back without losing sight of what chart you actually bought on in the first place. Microsoft. Now, there was earnings this week with Microsoft, and they kind of produced this kind of giant weird candle here. I think prices spiked after hours and then pulled back. But ultimately, even with all of this,
Well, yo,
all of
bro,
this erratic stuff,
how are you, bro? Yo, bro, oh, bro.
all of this erratic stuff on that chart, and still,
Bro, be down or no, bro? Yes or no, bro? To down, to down. Блант, алло, ты меня слышишь, моя грязное говно? Вы чё тут не на русском разговариваете, я вас не понял. А? Шлюхи. Алло, на русском разговариваете? Я тебе еще раз говорю.
poor Russians, why they wonder why so many people are upset at them, eh?
На русском.
Anyways, folks,
Я тебе еще раз. Алло, говно, быстро.
Sorry about that.
that's okay. I'll let you look after that nonsense. How's that sound? So, anyways, because we do have better things to do with our time, the one thing that you can take away from this crazy ass chart is that even with all this weirdness at the top, so far the trend has been intact. So the inclination after these two massive candles, red candles, is, oh my gosh, I got to get out of here. But in reality, those candles just came back to the 5 EMA. And your next candle and the candle after that are still trading above those levels. So, yeah, is it running hot? Yeah, but it's still a bullish chart, right? And as long as that's the case, as uneasy as it feels, it's still okay to stay in this trade if you were long. And I guess the point is that it hasn't been shown any sign that it wants to roll. And when it does, quite honestly, it hasn't even tested the 20. Well, I guess it did here, but not in any significant way. So we really haven't had much of a continuation off of the 20 yet on the daily, and it hasn't even seen the 50. And when you look at the weekly, like, wow. Look at
the weekly is wow, exactly.
yeah, like I don't say that very often, but like that's like wow. Right? Like, this is just, it's like a slingshot. It's just snapped right back, and prices trading on the north side of all of this, and it's just not showing any sign that it wants to fade. Like it's over, like it is as, like I'm sure people have lost their minds trying to short this because, you can see that it's been overbought on the stochastic RSI for quite some time, but it's just full of gas, really. It's but when it rolls back, when it does, where's it going? It's going to this upper value range. It'll find the 20 MA weekly and most likely the 50 in the point of control, and you don't know what, already know what happens if it gets into the gap.
Yeah.
And to find the 200 MA on a weekly chart is not an unreasonable thing. It happens all the time. But if you're to say to someone, this stock could go from $530 to $350 or $60, that sounds like Armageddon.
Yes.
Right? It would. Like it's just natural human reaction. It sounds like Armageddon, but you have to appreciate that there was just so much push to the upside that the ranges that you check on the way down are pretty deep. And of course, you only get there if you don't find support, right? So, but that's a pretty nice chart. So for those of you, for those that are in Microsoft, then you did well. You did really well. Like I'm sure options traders did well there.
I'm that guy. I'm that one guy who loves to invest long term. So I really got in very, very, very early.
No, that's good. That's what buy low, sell high, right?
Yeah, exactly.
MicroStrategy.
But the catch here is these projects. Do you know the reason why most of the people are holding is because of what's coming, is the utility.
I hope that's the case, right? I hope that's what happens in the crypto space, is that the technology itself becomes so strong that it can't help but add value and create value. I hope that's the case. I really do. That's what I want it to be.
I can actually assure you that so the CEO, one of the CEOs, is in touch. He's a good friend to the Nairobi Stock Exchange CEO. They're having a meeting very soon, tomorrow, and they're in the sandbox with the government in terms of regulations and getting the license for tokenization in Kenya. And once that's done, Capital Markets Authority of Kenya is well known. So it will open a can of worms. So that's why people have been buying and holding.
The 30-minute
You tell
chart.
people to sell, they don't want to sell. Honestly.
Well, people will do whatever they're going to do. Buy, sell, hold, doesn't matter to me.
But for you, I know for you, it's like, look at the chart. Look at the chart. Look at that chart.
Listen, it's okay to hold things. Don't get me wrong. I think it's a good idea. But why people do it and for the reasons, are they the right reasons? I don't know.
Take profits.
I don't know. Yeah, exactly. This 30-minute ES chart, I really like the 30-minute and the 1 hour on the futures charts, especially when we run our script, because we really get good looks into what's going on early. Like here's a 9 a.m. candle before open, big dump, right? You want to get on the right side of these things early, and you had an opportunity as early as 4 o'clock in the morning, 5 o'clock in the morning to be ahead of that trade. And for some traders, they would only stay in this trade for a few candles, which I understand. But recognize that the market was telling you the whole time that it was safe to stay in this trade. Even here, it was safe to stay in. Right? So you can get those early looks.
Yeah.
Just switch your time frames around.
Yeah.
And you'll see it. So
the beauty about listening to you sometimes is when you tell us take profit when you can.
Absolutely.
And along the way, along that chart, because I bought early, along the way I do take profit, but the amount of profit that I'm in at the moment is unbelievable. I can only take like a little bit of profit here and there.
That's good.
I've literally already taken profit.
Good.
I've taken my initial capital. Let me talk about that.
So this is a 1 hour XRP chart, and this is the 1,000-day moving average on a 1 hour chart. So you might not see this on the daily. Probably won't see it on the weekly. Like the longer term ones, don't be surprised when you don't see them if it's a newer issue. But the fact is, on smaller time frames, you'll see it. And why is it relevant? Because everything is fractal and it's providing a range. And you literally wick the 1,000-day MA after this big pull down and you bounce hard. Right? And then you start taking out level by level by level. And you stay in the trade until the chart tells you that it's probably good to get out. And this is another example of the money sandwich, right? Here's the bread, the insurance you pay at the bottom on this side. This is what you pay on the other side, and everything else in the middle is your money.
Exactly.
Right?
Exactly.
So level by level by level. So you break one level, you'll find the
It's your
next.
money.
You break one level, you'll find the next. The same applies to the downside. You broke one level, you found the next. You broke one level, you found the next. Here's an example of the failed breakout that rolls over, takes out the previous wave's low. And impulse down, sideways. So this is bearish. This sideways move on to the downside, when you would go sideways like this, is not bullish. And I would expect that you go sideways and then down again. Unless so much money comes in that it changes everything, right? Enough money comes in to change and pull the 5 EMA up through the T line like it did here and change the trend. Is this going to be the first touch of the 50 on this time frame? Yes. Our first touch is more likely to fail? Yes. So that's what you have to be concerned about to the upside. If you break through it, then you're going to look to the 20 and the 200 and the previous wave's high and then you break it one level at a time. So, all right. Anyways, I actually have to hit the road today. I got an hour or two drive in front of me, so I have to skip out a little bit early today. But if there's no other questions, I'm going to end it now. If not, I can hang around for a couple minutes. But
thank you very much, Blunt. We really appreciate you.
thank you, sir. And just keep in mind, your levels, level by level, right? That's all it is, level by level, right? Break one level, find the next. Break one level, find the next. Follow the T line and the 5 EMA. Trade on the north. When you're on the north side of it, you're long. When you're on the south side of it, you're short. Like, look at this candle that we were talking about. It's already fading. Right? So, alrighty. So listen,
Can we revisit the normal charts maybe after a month?
Yeah.
I think after August, maybe we'll probably have the license from the Capital Markets Authority.
Well, that'd be really something for them. Yeah.
Yeah.
That'd be great.
Yeah. So we can revisit and say, all right, so let's look at this project.
Yeah, for sure. Maybe we'll do a little more of that kind of thing. So.
Yeah. All right. Yeah.
Well, I will see you guys on Thursday afternoon at 12 noon. Until then, take care. Make sure you set your stop losses in your